Tesla 100. Was it April? Give it another cycle of like 3 months if you need it lower. What's up, Jen Jen? What do you mean no audio? How was your bar scene? Was the bartender impressed with your gilded memes? The bartender didn't believe that I had custom memes. I did. So many custom memes. Yeah, well, there was quite a few. It was excellent. How was everyone's weekend? That's the hope, is that one day the memes will just get into circulation and somehow usurp the originals. I'm making gumbo and hoping you tell me the market's gonna crash. Why does everything always have to be so polarized? I'm starting to think I'm not even that bearish, and you guys just want me to be bearish all the time to justify the out of the money puts that you're holding on to, which is unreasonable. Hold on one second. I made bacon. Okay. I made pizza in the pizza oven. All right, nice. I went and got pizza. I went to Lucia in Brooklyn. God, it was so fucking good. I don't, you know what? I don't even need to think about how good it is. I just bought an entire pizza and brought it home, so I've got extra. Ooh, I could have that for lunch. Nice. Tom Lee's bearish. Tom Lee's been bearish every time we don't get an all-time high immediately. Because puts, that's why. That's what I thought. Yeah, I went to the Morgan yesterday, and I saw an exhibit on the Ballet Russe, which was it's some like Dutch masters stuff in the library. And then I was bored, and I went and got pizza in Brooklyn because the line at the place in the city was like fucking 6 miles long. Then I went to get ice cream, and the ice cream place got popular on TikTok, so that line was also 2 hours long. So I just went to the other ice cream place that usually has a 2 hour long line, and I got ice cream from there in like 30 seconds. And then I got drunk a little bit. What do you look for in sold condors? Do you look at delta? Not usually. I mean, you can. My condors are really very rarely like equidistant. I generally sell like outside of where I think our trading level will be if I'm selling theta on them. Um, Usually one side of the condor is much closer to the money than the other. The library was beautiful. I'm glad you enjoyed the library, porn, Gen Gen. As a librarian, I feel like that's got to be like your mecca. I keep getting sportsbook betting ads like I'm some kind of degenerate gambler. Disgusting. Yeah, yeah. How dare they? I read TA for the financial markets for the very first time. Do you feel disappointed? My brokerage finally allows the selling of CCs, but my account is down so bad I can't do anything on it but Fubo and GoEV. What do? I mean, Fubo covered calls aren't bad if you're really selective on when you sell them and you have a low cost basis. I've made okay money on them. I don't have like a huge Fubo position though. I think I only have like 20k shares or something. I'm gonna be getting an apartment tour. Whose apartment do you want to tour? I didn't see JFresh's bomb on Meta. Did he say something about Meta? I don't look at Twitter. I haven't looked at Twitter very much recently. I know despite JFresh's illness, he's somehow able to shitpost on Twitter like 23 hours a day. Looks like he's complaining a bunch about people talking about seasonality, which is pretty standard. I think he might be developing hypergraphia. How's the cat? He's still mostly living under the couch. If I ever get like $1,000, are there any $10 stocks that make good CC fodder? Yeah, I mean, any ones with decent options chains. There's tons of them that do. It doesn't necessarily mean you want to own them. They are $10 stocks. But usually volatility will be elevated. We look at KV was killing it. I haven't looked at it in a while, but yeah, we could take a peek. Yeah, back up at like $23. It's been doing good ever since last earnings. trimming back a little bit with the move in tech and the rate cut. Obviously, they're more of a flight to safety, consumer non-durable kind of deal. So, I mean, they won't benefit a lot from like rate cut speculation or excitement there, but they are paying down like a fairly significant chunk of debt, so lower rates and possibly some refinancing could help them out in the long run. However, if there's more fear of recession, they'll probably do pretty well. When can I sell my DVN above 46? I don't know. Oil's kind of recovering, and Israel's going to war with Lebanon now, right? I wonder who could have seen that coming. So that'll be great for all the oil neither of those countries produces. The U.S. wants a foothold there on the sea. I mean, strategically, it's a phenomenal region to take over. And there's no like active functional governments there. So they can just push up into Lebanon and Syria and they can just get that whole corner of the Mediterranean. And then we can build some nice US naval bases there, right? Maybe Beirut. I hear that port's kind of fucked. I mean, they could revitalize it. And then boom, and we've got a naval base right near the Suez Canal, and it'll be more difficult to disrupt international trading. Can you go over IWM? I'm taking a break from SPX. Yeah, it's probably gonna do a bunch of the same shit that SPX is gonna do. 220's been support. It doesn't look like that's holding up very much. A double rate cut means that the Fed probably expects that they've held rates for too high for too long, which they have, but it's irrelevant because the economy is booming. Just not small caps, right? Small caps aren't booming. And the PE ratios and IWM are still dog shit.
How do you put their pickle in my jar? Mind looking at
Yeah, I
PLTR?
could take a look at Palantir. Give me a
Thanks.
second.
3.
Um, Recent high test at 26 following the rate cut. Could probably see this fall back to 20 or maybe under 20. Seems to be finding a low support pretty consistently. I can take a look at the positioning on it. Hmm. Nope. There we go. Little support at 220. Looks like that kind of starts to. Let's look out into like October OPEX. Yeah, still the primary support at 220. If it loses 220, it could fall back to like 211, 210 again. The upside's a little choppy, but there's a decent amount of interest to retest 25. I would say most bounces are going to move between 20 and 25. Let's see. Gamma neutrals at 218. So it needs to do a little bit more than lose 20. Gamma's falling off and went negative on Friday after following the expiration, and a huge fucking chunk of Delta fell off. Like almost 20 billion in Delta. Which probably isn't going to be super bullish. I'd say there's a decent amount of Delta building to the upside, so probably picking up some sold calls. It's starting to get a lot of put OI, especially at like 210, 200. Call interest isn't very strong after 225. It's not even that strong between 220 and 225. So I would say this kind of looks weak again. Realized vol and vol are both kind of dropping off a little bit. That might be a little bit supportive. Yeah, but a loss of 220, 221 would be pretty bearish. It could dump as low as like 212, 210. So it's not looking particularly great. Gamma Max is still moving towards spots, so somebody's still buying some out of the money call positioning, but if the delta after the expiration doesn't recover, that's pretty low. I mean, that's the lowest the delta's been since like July. So I would say probably due for a pullback. Might take a little while though. Palantir. Yeah, we could take a look at Palantir. It's been buttoned up against Gamma Max for a little while here now with quite a lot of speculation that it's going to be going on to the S&P 500, or it is being added to the S&P 500. Let's go to the daily. I would say that the accumulation looks pretty strong still. There's not a lot of range to the upside, like 38 right now. There's some call interest all the way out to 40. That looks pretty well supported. So I would say it probably keeps pushing up. Implied vol might be picking up in the short term. Not really. Well, not yet. But realized vol is starting to come down. Not a ton of FTDs. Yeah, I mean price is pretty well supported here. It's probably got like $3 more of range to the upside. I don't think any pullback is concerning unless it gets back under 33, in which case then it could get kind of ugly. But it looks like all of the interest on it right now is pretty bullish. Even in the short term. A lot of sold puts. Yeah, I would say probably keep pushing up to like 40. IWM has the herps. I'm not touching it. It's fine for straddles. I mean, you pay a little bit more for them, but they're usually pretty good. Based on Jfresh's graph on Discord, I haven't seen it. How do I apply for jobs today or start drinking margaritas at 10 a.m.? Good question. Up to you. I don't blame Tom Lee. With those eyes, it's difficult to see the chart clearly. Didn't Tom Lee say that IWM was supposed to be like back at like 260 by now or 250? Yeah, we could check out DBN. Fell a little bit below my buy range, but still holding on to trend. Uh, Looks like it's a little buy support here after the dividend was issued. I mean, if oil keeps going up, it'll benefit from that. Definitely one of the cheaper deals for big integrated oil. It's underperformed a lot of things. I think Oxy's really cheap right now too. Yeah. I should actually pick up a little bit more Oxy here. Wait. 37 would be a sweet price. Wonder if Buffett will let it get that low. Any thoughts on you? Tons of calls coming in. We're probably sold. That's usually how calls work. Looks okay. It's got a reversal. Still needs to go up above 25 to confirm it. I don't have data on it, but we should add that one. Let me take a look at their financials real quick. 3 billion in liabilities. They're getting paid down over the last 3 quarters. Not a lot of current liability. Operating income's been slightly improving. A little bit of improvement in net income. Some margins are getting a little bit better. Some pretty outsized earnings beats. It's still fairly low estimates. Hmm. Um, I don't think there's like a great justification for a higher PE multiple, and Unity's had a hard time holding on to price improvement in the past, but it does look like there's some accumulation. I don't know if it's something worth playing in the short term. It could be, but it might be worth something in the long run. They're they're trimming down some of their debt, and their net revenues and margins are improving ever so slightly, which is a good sign. Obviously, software as a service, so it's definitely an industry that could get a lot of PE, like it could pick up a lot of multiples, and could see more margin expansion out of them over the next like year and a half. So I don't actually hate it. Um, no problem. October 1830C. I mean, I don't really care about calls coming in. That doesn't mean anything. That's not like a something you should even bother tracking. Like just volume on options, is fucking useless. There's plenty of institutions willing to like lay on big bets for earnings. It's not actually. I think it's before earnings, right? Yeah, earnings is November 6th. Well, maybe. Prior earnings is August 8th. Yeah, it should be about right. I mean, yeah, they could just be sold to leech off vol. Like, I mean, there's a million different reasons why you can get big options volume moves, and none of them have to do with the stock going to that price. There was a study like 2 or 3 years ago where they correlated like stock price movement with large out of the money options positionings. So they kind of took like all the like unusual options flow volume notifications from Opera, and they tracked the underlying performance of stocks based on large out of the money positions being bought, and the correlation was super low, like sub 40%. So there's no statistical relevance to large options positions being opened. Anything more on EWJ? No. I mean, I've got time on it. I'll probably start to average it down as we start to approach like inflation and employment data. Nvidia actually has a ton of weakness on its options chain. Nvidia doesn't really look bullish at all, and I think some of this buying that we've seen is just due to like Jensen selling constantly, right? Jensen's been selling the fuck out of the stock like every single day, right? And those shares are probably lent, and that's gonna drive like bid to cover. Um, but the options chain itself is not bullish the way it was, right? I mean, like there's some 120 call positioning, but that seems to be having more of a negative effect on the price of the stock because there's nothing like pushing up in to squeeze those. Um, my only problem with that is it's really prone to drastic moves, right? So there's a decent chance that like I mean some news will come out and the video will run regardless of the positioning on it, and that's a good reason to probably stay away from it and not try to play the weakness in the options chain. But right now it looks pretty clear to test like 113, and if it loses 113, it could drop back down to like 105, 100. There's like I'll show you guys. There's just really not a lot of strength on the chain, and then in addition to that, the vol on it's just been getting fucking cooked, right? Like realized vol and I and implied vol have just been falling on basically every time frame, right? IV is getting crushed super hard, so you got huge short call positions coming in. And they're pretty far dated, right? Like we're seeing IV crushed like all the way out to like the 90 day. Um, the range that we're currently trading in isn't particularly bullish, right? Like there's a lot of risk of like slipping down the chain into like more negative gamma, right? And you can see that a little bit better here. Like there's one support at 115, right? But then there's nothing till you get down to like 110, 109, and that's really weak, right? Like none of the positioning down here is very strong. And if it loses that, like it's just straight back to 100. So and this is all sold calls, right? So quite some effort to push up into this fat chunk of sold calls, and the chain could kind of stay like this until we start to approach their next earnings, and then these short calls might start to close, right, as people start to speculate and IV starts to rise, and that might turn price action back around to the upside. But how do you tell they're sold? Well, I mean, with this it's pretty easy, right, because IV is just getting fucking murdered. So like the volume on those options is really high. Hold on. So you guys like 118. You can see all the volume here, like on these out of the money calls, right? It's quite a lot. Like, I mean, the 120 strike has 173,000 volume, but IV is going down, right? Which is the opposite of what you would want to see in the bullish dispersion trade. You would want to see IV climbing, right? IV climbing bullish, IV falling not bullish. So no one's going long vol here, which means that the majority of those calls are likely sold. Well, yeah, I mean, people have been pretty afraid to dive back into the dispersion trade. I mean, look where we were in July, right? Compared to where we are now. Like, even if I get rid of SPX here, just and just kind of take a look at how dispersion has moved, right? And the correlation over the last um nope, that's the wrong window. There we go. The correlation over the last couple of months. Like this is like this slow climb up in correlation is not indicative of a lot of people laying on risk, right? Like we got the BOJ cuts and the market almost crashed back here. But we're not seeing a like a fat chunk of that leverage return, right? And so until we start to see people, longing vol in those tech stocks, and I went through a bunch of them on Friday for the like zero DTE write ups, and they all look like shit, which is tough because the index like doesn't look great, but it doesn't look that bad. And you would assume that if SPX looks good, you know, little, little like thumbs up, then tech would also, but it doesn't. It just like I mean, volatility on almost every Mag 7 stock is declining pretty rapidly. I mean, Tesla, Nvidia, Netflix looks okay, but it's not really the Mag 7. Microsoft, Google, Amazon doesn't look too bad. Apple looks still pretty stable, but it's fucking Apple, right? Was the BOJ rate increase, which is effectively a U.S. rate cut, right? IB 30 versus 90. Well, that's the how far out, right? So your IV generally the further out you go, the more IV increases, right? But if you're seeing IV fall across, all of the time frames. So that means that not only is IV getting shorted in the near term, it's getting shorted at on the long term as well. So they're pushing down the IV across multiple expirations, not just the near dated ones. Well, not necessarily dumpies this week. I think we do have some room to the downside, but I also think that things should stay moderately well supported over the next couple of weeks. So, I mean, JPOW has effectively opened up some easing, right? Like by cutting 5.5 with CPI at 2.8, we're we're back below a restrictive rate um in terms of real rates, but that'll only last as long as there isn't as long as we're working off of the August data, right? So when we get the SEP data for CPI employment, that can all change, right? And so I mean, basically what the Fed is doing here, sort of, by choosing to go zero point 0.5 instead of just taking the free 0.25 they had and leaving rates restrictive is they're trying to inflate the market, right? They're saying, effectively, they're allowing inflation in order to stabilize the market, which is where you get like an inflationary bear market. This is a something really really similar to the dot-com bubble and like 2007, prior to the GFC. Can Gamma Strike show the rate of change in IV net IV? I mean, so we can look at like IV on all the time frames comparatively. Like obviously IV in the short term is, dropping more rapidly than IV in the long term, right? Um but IV in the long on the long end is falling as well. It's usually never going to fall as rapidly. And then, you could compare that to the actual realized vol in those same time frames, right? And you kind of see that realized vol is picking up to the downside in the near term, but still kind of flat over the long term. So it's more of like, you're getting more of like a slow bleed in over the longer run, because the realized vol isn't falling as fast as the implied vol, and that's stabilizing. Because if implied vol falls too much, then options are going to get cheap. That's going to encourage people to come in, push prices back up. If this is 2007, do we really have to wait for a year for things to shake out? I mean, not necessarily, right? The risk in these positions becomes more concentrated and more compounded over time, right? And so, you kind of have an exponential growth in risk, and at some point, something's going to trigger that. Now, yeah, that could take a while, but it could also, be fairly soon. Like, we obviously saw like a very near catalyst with the explosion in VIX just a few weeks ago. And so, those elements are becoming heightened. Like there's a heightened degree of risk present in the market now, compared to where it was. And then we have the Fed rate cuts, which, I mean, I don't even think the repositioning is fully complete after the surprise there. And you're gonna get cost to carry on the back end rising. Like everyone thinks that like the Fed's going to cut and rates are going to come down, but I don't think so, right? It's just going to people are just going to feel that there's more risk at the long end of the curve. Yellen's going to need to issue longer debt, right? And then, the back end of the curve is going to move up, and you're going to get that bear steepener where the front end's coming down, the back end's going up. And that's really bad for the banks, because the Fed doesn't really have a good way of stabilizing that quickly. And I mean, I personally think it was a big mistake for J Powell to cut 50 points. I think he had a free rate cut, and he should have just taken advantage of that and left things restrictive instead of opening himself up to, stagflation. Well, not just stagflation, like runaway inflation. Because I mean, this is kind of what Arthur Burns did, right? Is if we take a look, hold on. So, yeah, this is a good image. So if we kind of take a look at this, you know, Burns had really thought he'd gotten a good grasp on inflation, you know, somewhere around here, right? You know, they were like, yeah, this is coming down. We've got this shit under control, and it was still running at like 5%. But they felt that they had gotten policy to a point where they could start to cut rates. They cut rates, and then inflation skyrocketed. And it was only when, you know, Volcker came in and raised rates to unbelievable levels that we were able to tamp that inflation back down. And really, I mean, it took until like the mid to late 90s for us to really rein inflation back in a consistent way. And then, you know, we fucked it all up again with the dot-com bubble, and then we fucked it up again with the great financial crisis, and then we're fucking it up again now. So it's, you know, I mean, it's definitely something that we're just gonna have to deal with, right? I mean, we're probably going to get another reignition in inflation, except now the Fed will have fewer tools with which to manage it that are not overly restrictive, right? So now, you know, if inflation rises and the Fed has to go back in and raise rates, they need to do so in a way that is definitively restrictive, which means pulling a Volcker, right? Because otherwise they won't be able to contain the outbreak in inflation. Like raising rates moderately again won't work because nobody will trust the Fed anymore. Not that they should, because the Fed is, you know, fairly fucking ineffective as it is. Well, it's because we're very intentionally repeating the mistakes of the past, and we're assuming that um the benefit of, you know, so much printed money will float us through it. And it has so far, right? I mean, like all of that fiscal stimulus has really pushed this thing a lot longer than it should have. But it also comes with a hefty amount of unrealized inflation, right? So now that the Fed has loosened rates, right? If we go in and, you know, we get, you know, a boost in employment, right? Or we get a boost in inflation, you know, those rates are going to become restrictive again, but they're not going to be restrictive enough to slow inflation down. Right, so we'd almost gotten the Fed funds rate to a point where it started to kind of slow inflation down, but earlier this year we had a lot of supply side inflation. Shipping costs are still elevated. All it takes is a small bump in oil, right, above like 72, 73 a barrel, and we're right back to inflation growing at a rate faster than the Fed fund rate was able to handle at 5.5%, let alone, you know, what it can handle at 5%. So yeah, it's a tricky spot they've put us in. Who will go Jackson's Hole 2022 Volker? We'll see about that. I don't expect him to do anything effective. Maybe his replacement will, though. Let me see if IV conditions are changing. Oh, you mean like just one single? I don't like aggregating them. I think it's better to look at them individually. I get what you're saying. But I mean I feel like you're introducing when you do that, Nitu, you're introducing prior data and you're adding additional lag to the signal, which I think actually makes the signal less effective as at least as a trading tool. I mean, a lot of our goal with Gamma Strike is to provide the now, right? Like you don't want to go too far into trying to predict the future because obviously that carries an enormous amount of risk. And you don't want things to lag too far behind because then you're just telling yourself lies about the past, right? But if you have a very clear picture of where positioning is at this moment, right? That's one of the best analytical tools you can have at your disposal for the market, I think, at least. And avoiding adding those lags, right, or those projections is I think a really strong approach to ensuring that the data that we offer people remains actionable without introducing those additional like margins of error. I mean you can take that data and then make assumptions based on it and introduce your own risk, but you're also introducing it within your own tolerance, right? Which is much better than having it like handed to you. Anyway, just a thought on that, I suppose. Hundy Large, welcome to Zillionaire. Thank you so much, man. Hit me up on the Discord. I'll get you added to the country club after the stream. Did you see the price jump on CEG news? I didn't. Nice. What was the news? Are they gonna restart 3 Mile Island? That sounds like a sell the news kind of information. That's gonna cost them a fuck ton of money. Pencil, I want to get puts. Yeah, you might not be wrong. That sounds like a ton of capex to get that operational. And Jesus, the EPA is going to be so far up their fucking ass the whole time. EPA, OSHA. I mean, that sounds like an actual nightmare to get up and running. Unless are they reopening like alternate reactors? I would look into it more, but if they're planning on reopening the original reactors that almost melted down, that could be a fucking. I mean, even without doing that, it's going to be an ecological nightmare. Microsoft inked a deal with them. Well, I mean, cool, but is Microsoft going to pay all of the capex required to get that up and running? Also, Jesus Christ, what a fucking waste of money. Imagine buying a power plant to run Copilot. I kind of want to short Microsoft too. I wanted to do that anyway, but now I want to more. Reactivate the previous infrastructure. Jesus. Yeah, I mean, that can't be bullish in the long term. That's gonna, yeah, it's gonna cost a lot of money. Your uranium play? Oh, I mean, that's awesome for demand on uranium, but that was rising anyway, right? The big problem with uranium is that the mines take a really long time to get up to operational capacity, and the current level being mined is not sufficient, right? And then Kazatomprom, which basically single-handedly controls the world's uranium price, isn't happy with the current price of uranium, right? So they're cutting back production. More and more nuclear power plants are being opened because, let's be honest, it's nuclear power is the really the only option we have currently for like grid level uh energy, right? Where we can produce significant amounts of green energy. And so, if we're gonna follow along with international carbon emissions protocols, and other countries plan to as well, we're gonna see more and more, and we already are. We're already seeing the investment into building more and more nuclear power plants. And that demand is going to increase, but as that demand increases, uranium miners are going to want more money for uranium, and so they're going to use their control over the uranium market to increase prices to a level where it makes sense for them to increase extraction. But it's a really dangerous game because it's hard to increase the overall net supply of uranium, even at maximum capacity. You know, demand is going to outpace our current supply by quite a bit over the next 5 years. And then the demand is picking up exponentially, but the supply is declining in the short term. So it's starting to get realized even faster. Everyone's just afraid because of what happened in Japan. I mean, there's also like a 9 magnitude earthquake, right? Like Fukushima, and Chernobyl are like the one-offs, right? Compared to the number of active and functional nuclear reactors around the world, the amount of accidents that have occurred that are significant is very small. CEG is having a huge issue with employing qualified staff. Yeah, that's a problem too. 9.0 earthquake plus tsunami. Yeah. And even Japan's already talking about increasing, turning their reactors back on and increasing the number of active reactors over the next like 10 to 15 years. It's kind of like saying planes are unsafe because a few have crashed. Yeah. And then you also have like thorium technology, which is even safer, right? Like the molten salt reactors. Think of all the people who died from cancer caused by pollution from coal power. I mean, coal power, microplastics, leaded gasoline. I mean, and all of those infinitely worse than nuclear power. The fact that there's any fear in society about ramping up nuclear power is ridiculous, right? I'm just gonna wait until the CEG run loses some steam and then get a lot of theta on those puts. I would start waiting until they begin to budget in. Like the initial like knee jerk bullish reaction could take a while, I might wait till the cost analysis for getting 3 Mile Island up and running starts to trickle in. This is a lot like what happened with like FSLR when everyone got super bullish on them, like back in 2021. They didn't factor in the cost of meeting the amount of the cost of expanding production to meet the amount of incoming order flow. My prevailing theory is the stupidity we see in today's world is lead based. I, I, okay, I could see some of that being true. Although there's not a lot of generations. Well, there's not a lot of people left that had lifelong leaded gasoline exposure. But sure. I also think as like one of the last like evolutionary pressures that humanity had was intelligence, and society and civilization have gotten to the point where stupidity is no longer like a it no longer reduces your chance of survival. I blame the asbestos. They've done studies on boomers and lead exposure. Yeah, they have. I mean, it was worse in the generation prior to that. And there's not that many fucking boomers left, to be honest. I mean, they're starting to die off, and the rate at which they die off is gonna start to increase exponentially. And their children, really only had exposure through their developmental years, right? And then, I mean, now lead, like atmospheric lead levels, they've been super low for like 20 years, 30 years. You beat me to it. Stupidity has no consequences. Well, it's problematic. Let me see what. Oh shit! It's like 1:36. I don't want to leave you guys just stranded.
What?
Well,
How's
so
Jork's
to get
butt?
the dust out,
It's
anyways, hold on, Kirk. This is a really riveting story. So, anyways, once the dust settled, literally, um, what I did to make sure that it didn't get any further was I put it in my butt. Um, and once I put it in my butt, that was the end of the issue. Uh, and so, yeah. Anyways, that's what I would recommend in your situation with your pool the way it is. Hey, Kirk.
Hey guys, what's up?
I hate you.
Wait, me or Dork?
I don't know. I
Uh,
think both of you. I
that's
can't decide.
that's fair.
How you doing, bud?
I
I'm
think
doing
the
all
butt
right.
stuff was funny for like 3 weeks, and it's been like 2 years now.
Yeah. It's just it's. I'm not gonna lie. It's starting to feel forced, but
All right.
It
it's butt stuff.
figuratively
So
and literally.
yeah.
All right. I'll think of something funny.
What do you want to talk about? There's so much to talk about,
Let's
actually.
talk about
It's been
our,
like a
our
month
our
since I've been
fucking
here.
reunion. Yeah, you've been dying. Um,
Yep.
Dork's been in the wind.
Yeah, Dork's been flapping about. I feel like every time Every time I talk to him, he's like, "I'm 3 hours out from internet. I'll be there in 3 hours." And I don't
Yeah.
know.
I
Every
don't,
time he's in
I
a
don't,
different spot.
I feel like his job is just sending him further and further away from civilization every week.
I mean,
Yeah, they're just trying to figure out how far he's gonna connect the wires out into nowhere.
the first part is it's not even voluntary. These fucking things.
Did Girk already cover GMA? Hmm.
Why are we talking
Let's
about
recover.
I forgot about this. So GME started to like run a little bit on Friday, and everyone thinks they're gonna go rich. You know, the usual.
Oh, went up a whole dollar? Nice.
What's it at? Like $13?
It's at
21.80.
it's at 21.50. Well,
Oh,
I think
all
more
right.
importantly, it's above 21.50. And arb started to explode. The tips are reaching towards each other in a very sexual way. So
Oh, the
it's
tips.
doing GME things. IV 30 is moving up. IV 10's rocketing, right?
I love JFresh, and whenever we talk about the tips with JFresh, it just makes me smile inside.
Because he doesn't know what they are.
Yeah, yes, it's a pretty. There's to him there's a basis in any. He's from.
It's
Let's
okay. You
see.
can just
Gamma
say
Max is.
they're too cool for him. Yeah, Gamma Max is like 25.
Yeah, here's the deal. GME. It's at 21.85. Gamma Max is at $24. Uh, the stock is boring as shit. It might go to 25, and then it'll probably go down.
That's all I wanted to do.
Tomorrow, guys.
Well, there you go.
Yeah. I wanted to go to 25, and then I'm going to sell naked calls on it again, and then wait until everybody's done whining about their money going down, and then close the sold calls when everyone gets excited. I don't even look at the chart on GME anymore. I just trade the sentiment in the GME channel.
Nice.
That's
Yeah.
all you need.
Do they know that that's all they are? Is just
Just an
a
indicator.
trading indicator.
I don't know. They might. The chat
Well, maybe.
Somebody
indicator.
go tell them.
Well, if you long GME
Somebody
when
go
they're
tell
all
them.
really depressed, you make money. And if you short GME when they're all excited, you also make money.
Yeah,
Isn't it
Yeah.
most stocks?
and if you DRS your shares, nothing happens
Alternatively, you can
apparently.
long GME when I'm making fun of them for like when I start making fun of them for following Cohen into the abyss. Or short GME when I'm just really pissed and tired of dealing with them. Those indicators all are the same. They're the same indicators.
Yeah, yeah. All right, we covered
Let's leave.
GME.
Yeah, covered. Done.
Does anything look fun on the FTD stuff? I don't really check that for. Let's see. Nah, not really.
Mm. I had like a bunch of FTD shit back when DFV bought in.
Yeah, but that was such a long time. I feel like that was a
69.
lifetime ago.
Yeah. Well, it was.
Yeah, cool. All right.
Yeah, so that's done.
What else do you want to talk about?
Uh,
Do you want to talk about how everybody thinks we're going to 6,000 by Christmas?
yeah, that's a thing. Tom Lee doesn't. Tom Lee's still butthurt about his terrible prediction on IWM, and now he's a bear.
Oh.
Yeah. JPM also doesn't think we're going to 5,200. JPM has said,
Yeah, I think
they're
I
sticking
feel
to
like
their 4,200 target.
I feel like they set that number last year and they've just like not change. They just forgot to. There's nobody there to change it. The intern got fired.
They lowered it. They lowered it
Just
in March. They were at 4,700. Now they're at 42.
oh, all right.
Yeah, but
So
that's been their
JPM's
only
about to have a
change
credit crisis.
versus Citibank, which just changes it every week. Like market
Yeah.
goes up, Citibank raises their target. Market goes down, Citibank lowers it.
Yeah.
Sounds
Yeah.
like
Just
fun.
kind of follow the market.
Last day of the year, they can just change it to spot, and they'll be super correct. That's what Tom Lee did last year.
My prediction for tomorrow is plus base.
I can't hear
Okay.
you at all. Are you on like a cell
Yeah.
phone or something? Like a jitterbug?
All right,
You're using your grandma's jitterbug? Get it out of your ass so we
Gherk-
can hear you.
Gherkin is our third party. It's you, Dork. We can't hear you. Yeah. You sound like near.
You sound like a robot.
Right. Dork's dead.
Yep, Torque dead. He tried to
He
fix
just-
it and he broke
just-
it.
Ooh, Apple hit Gamma Max. Pinged right off of that bad boy.
Yep. So did the SPX.
Yeah.
But I learned a long time
decent.
ago to not short Apple at Gamma Max. I'm just gonna sell.
Yeah, it
calls
looks like
on
it hangs out. It hangs out there for a while. Yeah.
Yeah, it likes to just fucking sit there for weeks on end.
But
But I am
everybody
gonna-
just likes to own it.
I am gonna sell fucking calls on it because it tends to not go up more again.
Yeah.
Also, some of the Delta is starting to fall off the chain. We got a decent sized move in Delta across a lot of the Mag 7. A lot of Delta fell off with the September OPEX expiry.
Yeah, you wanna throw this chart on there?
Give me some fucking charts. I haven't seen shit because I wasn't home yesterday.
Oh yeah, I went apeshit on Twitter. If you guys want, like, there's probably a good 40 minutes of reading material that I just shit out onto Twitter, just that I had to get off my chest.
Oh, there we go. Look at that.
You know what makes people on Twitter? You know what makes people on Twitter really angry?
No.
Telling them that there's plenty of homes. They get so upset.
How dare you undermine the house? Honestly, nothing will lose your analyst job faster than saying something bearish about homes.
I don't know that it's bearish.
It is. It is.
There's just plenty of homes.
If there's a lot of supply, then that means that homes are overpriced, which means that
there's also a lot of
assets
demand.
are overpriced. Which means that the value of things is speculative and not based in reality.
The demand for homes per capita has never been higher this century.
But there's more homes than that demand requires.
Yeah, so you have to keep people wanting more.
Yeah.
You need more people wanting to, drop their roommate, more people wanting to own and not rent, and more owners who want to own even more.
And the only way to get them to do that is
to drop 40% of all money onto them back in 2020, 2021.
Yeah.
Because that's what happened.
Yeah. You just need to ensure that the value of their assets continues to rise, and they will keep speculating.
Yeah.
But it's people like you that are trying to ruin the party. It's like you showed up at your friend's barbecue and just shit on their patio. That's what you're doing to homeowners when you tell them that there's plenty of homes.
You know what? I'm a bad American because you know what I'm doing? I'm not thinking about how I can upgrade right now. I'm thinking about making sure that I'll be okay if my house price drops 40% in the next few years. And
Hedging
yeah,
against the
I'm ready for
U.S.
that.
housing market? You really are. You really are becoming a shill.
Yeah, me just not wanting a bigger house
Yeah. I mean, don't you need
and
500 more
preparing to
square
live
feet?
within preparing to live within my means. If unrealized gains evaporate, that's
Next thing you're gonna tell me is that you're keeping
I'm basically a
your debt balance is low. So you're
yeah.
just
We have
not
two.
only are you
My
shitting on the housing market, you're not helping support the economy by over leveraging your debt.
Yeah, my van is now 7 years old, and my wife's car is 11 years old, and they both work great. We don't need to upgrade, so we're just not. I don't want to pay $1,000 a month for a new car.
It's almost
I
like
already
you
have a
want
car.
us to become the USSR.
I guess, yeah.
Yeah.
How do I sound now, guys?
Really far away,
Ooh,
but much
far
clearer.
away, but very clean.
Yeah. Really,
Yeah,
really
this
clean and
is
tiny.
this is tiny.
Mm.
Yeah.
You do
It's
kind of
actually
sound
against
like
the
you're
helium.
like
Like,
you do
honey,
sound like you're like 3 inches tall, standing on the desk, like
we
on your
shrank the
tiptoes, trying
door.
to reach the mic.
Just fucking turn me up.
I'm gonna have to turn
Yeah,
you up
Oh
so
yeah,
soon.
this is
we
the
have the
microphone.
power.
And then what you're gonna
This is
do
the
is you're gonna
microphone I wanted to use for all of
change your fucking mic in the team meeting later this week and blow my fucking eardrums up again.
it. No, I just did a setup where I put another USB cable into my little desk dock, so I can just like quickly hot swap the mic between my main desktop and my crap top for now, and then. But this is the mic I wanted to distribute between us, so we all sound the exact same. But anyways,
It seems,
that's
yeah,
for another
we're
time.
gonna sound the same. We're all gonna sound tiny.
Yeah, right. It's gonna be great. Yeah. I honestly, it was funny. Jay Fresh and I were talking about that a bit, right? Like everyone thinks that the home prices are gonna go to the moon because the Fed's starting a cutting cycle,
Yeah.
and I don't necessarily think that's correct.
Wait till rates go up.
Right? Yeah. The
Yeah,
long end,
well,
the
that's
long
the
end
other thing.
climb.
It's
Yeah,
like,
it's insane.
I mean, that's what we were talking about a little bit too. Is that just because the Fed's cutting short-term rates, doesn't mean that the long end is gonna follow, right?
Yeah, since we haven't actually gotten to talk about it since the decision was made, because we weren't together the last couple of weeks. We should. Holy fuck! What a huge mistake on the Fed's part.
I just don't understand. I don't understand. Well, I do understand. They're basing their decision on astrology, economic astrology, right?
Yeah.
The signs are there. The doom is coming, and we
If only we
must
had a
correct
prior
for it and prepare
example
for
of the
it.
signs being there and them not manifesting, right? If
2022
only
and 2023.
yeah, well, also 1978 through 1980.
Yeah,
Like if only we'd done this before and the outcome was terrible, we could take a warning from that and be like, maybe, but no, not JPOW's Fed. Um, I mean, it's really kind of silly too because they had the free rate cut baked in, right? Like the bond market had already given them a free 25-point rate cut. That wouldn't have changed anything, right? Real rates
yeah.
could have stayed restrictive. And they could have, fulfilled their promise to home buyers everywhere that they were cutting, right? And they could have, but instead they decided to actually ease, at least for the next 3 weeks, right? And that seems like a horrific mistake that is going to very quickly bite them in the ass.
Yeah, well, I think I mean, and part of it too is it's kind of all theater, right? I mean,
Yeah,
the driver of inflation is the deficit spending. And they can try to pretend like they're in control of inflation with, their astrology, their Phillips curve, their beverage curve, um, their inflation expectations, which is just a measurement of inflation. They can play all these astrological games and try to convince people that they actually matter and that they're in charge and that they can control it. But I think what everybody's doing is they're sitting there with their inflated incomes from, the fiscal stimulus that's still occurring,
yeah,
just waiting. Like, why would I buy a house now unless you're Atomic?
yeah.
Literally the only
Or
person who
dork.
bought a house at the top right before, yeah, or Dork, right
Yeah.
before they cut. Why would I buy a house
I had a
now if
plan,
I could
okay?
if I could get a lower rate,
In
right, in the
2027,
short
right?
term? Yeah.
Yeah,
But I mean, they're looking for like, I mean, if you can save $500 a month for 30 years or whatever, $300 a month for 30 years, why not wait a few months?
Yeah.
So then, but then, it's gonna become a rat race of like when who blinks first and who jumps in. So
See,
I
I had
think
a
there's
plan
more
when I bought
pent
a
up demand.
house.
what's up?
My my house buying plan was actually very well thought out. Okay. The whole idea was I'm going to buy now with a pretty high interest rate, and then in 2 years' time, once treasury yields fall and mortgage rates go down, I'm going to refinance at and increase principal by somewhere along the lines of $100,000. That's all. Super easy, right? My mortgage payment's going to be the same, but my
Yeah,
rate's going to be lower.
you and everybody else also tried that 2 years ago.
And in 2008,
Yeah,
everyone with their fucking jumbo loans.
yeah. The problem is
I
Yeah.
sent
if the back end of the curve doesn't come down, or if I
right,
mean if
yeah.
if the U.S. defaults on its debt or its debt gets downgraded, um, the back end of the curve is going to stay up for a really long time.
So I have a theory on this, and I mentioned it to JFresh a bit. I think we're going to see the long end reduce and moderate a little bit in the short term. By short term, I mean like the next year or
Mm-hmm.
so. Purely because, like long term, or uh, you think about everybody and how stupid they are. They're all thinking inflation is going to go to 2% eventually. So when you look at a percent yield on a 20-year, you're like, it's really not too bad because in 5 years, that's a 2% real yield, right? Not
Yeah,
bad.
yeah.
Um, but if inflation does not moderate as expected, and in fact becomes anchored at something like 3%, or the Fed changes their long run target to something like 2.5 or 3%, the long end of the yield curve is going to go up, and it's going to stay up for quite a while.
I mean, they kind of effectively did. Did you see the dot plot?
No,
Yeah.
Our 2026 inflation target is now like 2.9.
oh, Jesus fucking Christ! God
um,
fucking damn it!
Here's one thing I want you to add to your housing market thesis. Global dependency on US debt and the dollar, right? As China seeks to bring their economy back in line, they're going to begin selling long-term US treasuries on the declining dollar, right? So they've had to buy treasuries to keep pace, like keep the offshore yuan pinned to the USD, right? And they've been a big buyer of US
Yep.
treasuries over the last like 2 years. But now that the dollar is falling, they can start shedding those securities. And that's also going to be true for Japan and Europe. As international
Yeah, let's
dependence on a
see
strong
here.
dollar reduces, yields at the top end of the curve are going to move higher because it's going to be net sellers, right? All those, the only people left are going to be the prime dealers, and you know they're not gonna be fighting tooth and nail to get into 10, 20, and 30-year debt unless there's nothing else being issued and they just have to buy it, which means
Yeah.
persistently fat tails on long-term issuance.
China has been kind of selling.
Yeah,
I'm looking at
they've gotten a little
Treasury
breathing room.
foreign.
This is the first time in months that they've had any kind of room on the yuan, right? Like they kept raising their target and raising their target. First, it was like we're gonna pin it to 703, and then they were like, okay, we'll try 708, and that was like 710, and I think it got up to like 722 at the peak recently. And now it's like back down to 704. And so all of those securities that they had to buy up, they can start shedding and they can just sit on their gold hedge while the dollar falls.
Yeah, so it looks like in July of 2023, China had 822 billion, and now they have 777 billion, so slightly down
Yeah.
to flat. And it's kind of just been dropping from that point slowly. Japan went up a little bit and now is basically flat. They're the largest holder. They've got like 1.1
Yeah.
trillion. Who went up? United Kingdom's added 120 billion. Luxembourg's added 50 billion. Cayman Islands 78 billion.
That's hedge. That's
Canada
probably
70.
hedge funds.
Yeah, Canada 78 billion. Belgium flat. Ireland's up like 40 billion. France is up 80 billion. Switzerland is down 15 billion. I'm going to do the whole list. I don't care.
That's fine. Keep
Taiwan's
going.
up 30. India's flat. Singapore up like 50 billion. Hong Kong up 30. Brazil up 5, then flat. Norway up 30. Saudi Arabia up 30. South Korea flat. Germany up 10. Mexico up 15. That's interesting.
That's quite
And
a
then
bit for
all
Mexico.
others up 120-ish, 130 billion. So since, and most of them are in most of them are in duration.
Yeah.
Very
Yeah.
few in bills.
Yeah, yes,
So the
governments
yeah, so
for
the,
currency stability are generally buying. They're going to be buying the long end of the curve.
yeah, so they've gone from 7.6 trillion to 8.3 trillion ish over the last year
Yeah, and that's
total.
going to start to shed, and that's a lot of debt. That who's going to absorb it? The Fed. I mean, someone's going to have to step in and provide the liquidity on those as they hit the market, right? And the prime dealers can only
Mm.
provide so much. And the
Then
prime
we can
dealers,
listen to all the
yeah.
MMTers tell us that the Fed buying duration and holding it forever isn't money printing.
The
That's
problem is
that's another.
If the Fed's going to buckle down and just hold securities to expiration as their new form of fiscal stimulus, that is not going to give us the kind of growth that we see with them, actually printing more money at a an increased rate. It's going to see, the the fiscal stimulus side of things contract really rapidly.
Yeah, we'll see. I mean, as long as they have a negative balance on their balance sheet, somebody gets a positive balance.
Yeah.
Win-win. The person who gets a positive balance is the treasury, and then they just they pay it out to the banks basically.
Yeah, and then I think we also need to talk about the short paper side of things because the liquidity crunch there is kind of interesting. Like, obviously, the Fed cut triggered a little bit of a squeeze in the money markets, right? Like, the 3 and 6 month rocketed on a 50-point rate cut for like a couple days. That's starting to trim back again now, right? But if inflation comes in low and it's not supportive of the near term rates, the value of those is going to go up, right? And we're going to see a further squeeze on the short end of the curve. And that's propping up the cost to carry on a lot of the leverage that we're seeing in short vol and equities, and also the cost to carry on those massive bank burdens, right? Because they're getting that 5% on the front end. They're able to hold those hold to maturity securities for longer, like while they just stagnate and don't really gain or lose value, right? I mean, I think everyone forgets that these banks were getting that stimulus money, and they were buying the 10, 20, and 30-year sub 2%, and the prices of those bonds have not recovered, like not even close, right? Like
Yeah,
even with the 20-year falling briefly under 4%, they're still nowhere near shedding that shit off of their balance sheet. And if the
yeah, it's
yields that
gonna
No,
the
be
you
back
a
end
can't
of
you
the
tough
can't mark
curve
to
one.
market.
rise, yeah, they're still in the same situation they were in when I wrote about this earlier this year, right? Like, nothing's effectively changed for the banks and their long term exposure. The I mean, I don't even know what the hope of the rate cut is for them there. It seems like it just presents more risk to the banking system in the medium term. Um, but I'm guessing they're hoping that they can lend more and increase their net income ratios, like their net interest income ratios. But who the fuck are they gonna
Yeah, I
lend to? Like you said, like
guess.
no one wants to buy anything. Why would you get a loan at 5% today when you could get a loan at 3% in 2027?
Because you're me
Yeah,
and you're stupid.
I mean,
My
yeah,
one saving
yeah.
grace, honestly, though, is that I bought my house to live in it.
yeah, yeah.
So
I mean,
that's the
that's
only reason
actually
cheaper. I just
pretty.
think I'm an idiot.
It's been pretty decent advice for most of history. Is if you need the space to live in it, like people who are starting families and stuff, or just people who need that space and they want to live in a house, and they have the means to finance it at the current financial situation. It's usually always a good idea to just go for it. The only time it's a bad idea is if you're trying to over leverage into something you don't really need right away.
Yeah, if you're treating homes as homes and not as a speculative asset, and it's not like a second home, you know, derived from the leverage found on your first home, which is not the situation you're in. I know we give you a lot of shit, but I mean, ultimately, you've just bought a single house. Now, in a year, if
That
you
you
take your
intend
home
to live
equity
in.
and you're like, I'm buying an Airbnb in Reno because Tesla employees are always
Oh
in and out
God.
of here, then we need to sit you down and have a really long conversation about your debt to equity. But in the meantime, I mean, you've just bought a house and it's not that big of a deal. Yes, it's not the most advantageous position, and sure, you might have bought near the top, but It could be a lot worse.
Maybe
I
that.
don't give a
And
shit.
you had a decent down
Oh,
and
speaking
stuff,
of,
so you're not taking like a shitload
yeah,
of
yeah.
risk.
And houses
My
go up.
principal is way lower. Mine actually, I actually just looked at my Zestimate, and it is up, so that's cool. I don't really care.
Oh, you
but
get zesty?
I
gotta stay away
just
from that
honestly, I just
estimate, man. That's
you
like
know
crack.
you made
They
me
just raise
curious,
it
so I
like
looked.
they raise it like 1% every month just to keep people like exhilarated and also like scared that they'll get priced out.
Dork, you should just list your
Right.
home for 20% more than you bought it for right now. If you can capture the arb, you're a king.
Oh yeah.
It's
So some
actually kinda
anecdata for
true.
you guys. So I got some anecdata for you guys. So, somebody I know just got a job at a warehouse. Okay.
Oh boy, here we go.
You know, there's distribution centers in Reno, right? That's kind of
It's
pretty
a
much
big-
most of what Reno has is
Big distribution
data
hub.
centers and shit. Yeah, data centers and distribution is all Reno really has near it, and the data center part is not really Reno, but kind of Reno. So, anyways, they said that because they had just gotten the job, they're getting trained. They said there was the majority of people that were new hires, as well as them, were former Tesla employees. So there's your anecdata, and made me pissed off because I was like, God damn it, I did nail the top.
Well, they're totally going to make the same
It was
amount
bad.
of money they made at Tesla at a distribution center. I mean, isn't Tesla like famously not part of the auto workers union? So they just like pay their factory workers like shit anyway.
It depends on what things you work on, but if you're just like a general assembly tech, yeah, I think you get paid fucking peanuts.
Yeah.
But like the engineers who
Isn't
work on the batteries
Robo-Taxi
and
Day
shit, they get
coming
paid
soon?
good.
Where they unveil the thing that doesn't exist.
Robo Taxi and Tesla semis.
Robotaxi is like MOAS, okay? It's always tomorrow.
So is FSD.
I mean, we can
it's the
put
same thing to
cars
me.
on the road today that drive themselves. They'll just kill people. I don't know why it's such a big deal. I mean, I don't want to drive anymore.
We have cars that drive themselves already. It's called the fucking subway.
That's a fixed
Mhm.
track.
Wah, wah,
That doesn't count. What about my freedoms?
Well, yeah, I mean, sure, it is. You're free. You
Yeah,
fucking
freedom.
get a goddamn bicycle.
Get a freedom vehicle.
Right?
Ew.
Yeah, no, you're right. I do
I
need
feel
the.
like- I feel
What's the?
I feel like the French came up with the bicycle.
Yeah. Seems French.
Who invented the
What was-
bicycle?
Probably the French.
What was the thing
This
that the
is-
free inhabitants
This is
called?
the hard-hitting data that our listeners come here for. Who invented the bicycle? Should I ask
Some
ChatGPT?
jackass who's a communist. You should.
An
you should, and
Italian.
see if it tells you.
Even worse. Sorry, Girk.
That's all right.
Giovanni Fontana.
What a bitch.
Fontana. Those Fontanas always up to no good.
Wait. Wikipedia. Wait. There seems to be some controversy here because
First used in a French publication. Hold on.
What?
The Dandy Horse. Invented by German Baron Karl von Drais.
This is the DD, the top-notch DD.
apparently
then-
it's not
and then a
clear who came up
Scottish-
with the first
Then a
bicycle.
Scottish blacksmith named Kirkpatrick Macmillan. And then in the early 1860s, Frenchman Pierre Michaud and Pierre Lalme.
Holy shit.
Yeah, don't try
They
to
called this
don't try
guy-
to pin this on the Italians.
This guy Dennis Johnson, he apparently they're all like the first bikes didn't have pedals. It was just like you sitting on it and like skipping.
Yeah,
And this
that was the
guy,
thing.
this guy Dennis Johnson made one. He called it the Velocipede, and that's the coolest fucking name ever. Velocipede.
Velocipede.
Rear-wheel drive, invented by Thomas McCall. Interesting. The bicycle really has a storied history here.
I mean, do you know that for like
Oh, douchebags
up
hanging out
until
in
like
bicycle shorts started in the 1870s.
It does say the first widespread and commercially successful design was French.
All right, yeah. So let's pin it on the French. Although in reality, it was started as the dandy horse, or the Drossine or Loft machine, running machine,
or the Velocipede, aka the Bone Shaker. Dude, these people were awesome. The Velocipede's renaissance began in Paris.
Fun fact, ladies' bicycles had a lower top tube. And the reason why was because they had those really big dresses they wore. And so the lower top tube meant that people wouldn't see up into their nethers.
Mm.
Yeah, you wouldn't want your women running around on their bicycles improperly.
Exactly. Yeah,
showing off their hoo-has. That's still a thing. They've maintained that in women's bikes.
Yeah, it is still a thing that ladies' bikes have like a crazy low top tube, unless you're talking like actual bikes. But like for beach cruisers and shit, yeah, there's like ladies' beach cruisers that have it, and it also means that you can get off the bike, right? When you get off the bike, you can get off sweeping your foot across the front rather than across the back. Once again, exposing said hoo-ha.
Yeah. It's amazing the steps men will go to protect women's dignity. We're just so great.
Yeah, that's where I want this conversation to go. I love being associated with this part of the conversation.
I wish I had an entire group of people looking out for my dignity without my permission.
Oh yeah.
Yeah.
I mean, they kind of were. That's why they banned you from TGI Fridays.
That's true.
Low blow. Sorry.
That's all right. No, it's fair and deserved, and I accept responsibility for my actions.
But they did that for your own dignity, right? You can't do it again.
It doesn't look the way Jen's fired up now.
Oh no!
What do we do?
Jen, they're just trying to protect your modesty. Look, they even invented a skirt guard. So that you wouldn't get mud flung up into your nethers.
Oh man.
That's why it's called his story and not her story.
Oh god. Do we want to do a hard pivot back to markets, or are we going to just go?
All right, yeah.
Candlestick analysis on SPX. Let's do it.
I feel like we've sexist history of bicycles.
I mean, you just don't realize how sexist the bicycle is until you dig into it.
History in general is pretty sexist.
It's true.
And if people ask me when were bicycles great, you can answer 1870s Paris, France, the Velocipede, aka the Bone Shaker.
Maybe it was just a sex toy.
I mean, they are now. Have you seen road bike seats lately? It's pretty much meant to stimulate your nethers.
Just stimulate your taint hard.
If you ride for a really long time, what's funny is, as a dude, if you like ride a bike for an extended period of time, your ween will actually like start to fall asleep, and so it feels really weird when you get off the bike.
I don't like any of this.
Kind of like how like your hand gets all tingly when you like fall asleep on it, you know?
Yeah, I'm let's just go back to the butt stuff.
I've ridden bikes a lot.
Oh god.
Yeah, market stuff. Fucking candlesticks,
Yeah,
dude. These
OPEX
candlesticks
was
are a couple
fun.
shooting star dojis.
Did you show the little plot I put in there? The little OI contract value on the market dropped by the largest amount since like 2023.
It looks like he stepped away. This is our time to shoehorn stuff. So I'm gonna come out and say it. Inflammatory political remarks. Inflammatory political remarks.
Oh yeah, vote for you, candidate one.
Yo, no,
Candidate
J-Fred, that
candidate
candidate's
one
bad.
is better than candidate two.
No, candidate one is not the lesser of two evils, okay? Candidate one is a Marxist and terrible, and if you vote for candidate one, that makes you a bad person fundamentally.
You should vote for candidate three, which
Now we're
would then
talking.
hurt candidate one more than candidate two.
What are you guys going into politics? Jesus Christ, I only walked away for 30 seconds.
Yeah, well, we went for it.
All right, can we talk
You were
about
gone,
how
I had to.
Delta on the SPX fell off really hard?
It did.
Yeah, let's do it.
What the plot I have though is the OI contract value. So just
Yeah.
like take every single contract that exists, add up all of them, right? So that's just like the paper market of options. And as you can see, it dropped quite considerably. And you know, this always happens at OPEX. You can
It
see
does. Although prior
But
drops seem to be far less extreme.
they're less extreme. They also, if you noticed, I mean, I don't want to do TA on the market cap of the options market,
Yeah,
but
but let's do that
we
anyway.
have been, yeah, we have been hitting lower highs, and now we've achieved quite a lower low compared to the last two quarterly OPEXs.
Yeah.
Well, actually, the last three. Well, actually, the last four.
Yep.
Maybe. Actually, the last five. Yeah, it's been a while. So
This is like the
what
lowest
this?
options interest has been since like SEP of 23 on the
Yeah,
call side. Well, OI contract value for the call side.
yeah,
hasn't been
contract
lower.
value, right? Yeah, I'd have to look at raw numbers to see if. Well, I could tell you from just the data that I have that the calls that remain, there's still a lot of calls that remain. They're just much farther out of the money because average leverage on calls shot up very high. And unfortunately, the last time that happened was October to November timeframe in 2023 when we just started rocketing straight up.
Yeah.
And so I think what happened was, yes, all of those calls went off the chain, but that money goes somewhere, right? So there was, on Friday, there was almost $700 billion in contracts. And then, on Monday, there will be just under 400 billion. So $300 billion is now sitting that was once in the market, right? And so the question becomes, how will they deploy that? And it does seem like slowly over time, less of that is getting deployed back into the options market, or at the very least, you could argue that no more money is coming in. It's just the same money being deployed over and over again.
Yeah.
And when that starts happening, it's really kind of started around July that we haven't had more money get pumped in. Then you start losing, juice, right? If you're thinking about the Ponzi is you need more money to keep prices going up, you start to see a breakdown of this strong uptrend. And sure enough, in July was when, we had that real big drop, and then we've been recovering that, but really we've been I would say very violently flat versus in the past where we had this just violent uptrend right? So you can definitely see from October of 2023 to March of 2024. I mean, we were just rocketing straight up. Then we slowed down enough that we had a little bit of they lost it a little bit, and they got a hold of it again. But then we're starting to lose it a lot more, right? So we're kind of running out of juice at the time when people aren't putting more money into the the options market. So to me, I mean, that's potentially a bearish sign to look out for, because if people are pulling money out of the options market, that's a potential rug there. And again, it's all in calls. So the question becomes, where does that money go? If it goes right back into buying more stuff, and pushing markets higher into the new calls that are way out of the money now, sure. I mean, I guess keep going, but we need more money to come in than has come in before. So my guess is, at best, we're going to be flat for a while, and at worst, we're going to do some fun volatility stuff.
I mean, yeah, I think we've got a decent setup for a small drawdown. I don't think it's going to be stupendous or anything, not until we get more data. But I could see us pulling back from like where we are now, maybe 150 bucks, and then kind of just grinding out realized vol.
Yeah, I could see that
Because
too.
the current range was already kind of unstable. The expiration makes it even worse. We're way too close to gamma max to get like persistently bullish positioning out of the money, right? And so like gamma max needs to like they need to let up on it a bit on the near dated positioning. So like on SPXW, and kind of let it move up a little bit. Like get some sold calls in there. Watch the market fall back a bit. Keep selling puts into the falling market, of course, because you don't want VIX to get too high. But
Yeah,
it seems like a great opportunity to just like let things fall a little bit. A lot of those short vol positions that were really at risk have now fallen off. Mostly out of the money. And so, and I'm not sure we're going to see them leverage it back up again. I mean, I think we're moving into a period of persistently higher vol anyway. Like I think the
I think so
days of
too.
like 12, 13 VIX are now behind us. Thank fucking God, because that was just the
Yeah,
worst.
I think that there must have been some short vol players who have pulled that back a little bit.
Well, some of them also just got blown the fuck up, right? Like,
Yeah, true.
um,
Thankfully.
there was a so they're definitely more afraid than they were.
Yeah.
Only downs 5,000 next week. I mean, technically, this is a great recipe for another big pullback. Like we ran up, we tested GM, we got rejected pretty hard. Interest is falling off. The only concern I have is the collar in a couple weeks, because man, do they like to try to
Mm.
push us above the collar before it expires. And
Yeah, they do. That's
we're so
very,
close to it, right?
yeah.
We're only like fucking $20 off. Or well, I guess Friday now we're like 50 off.
Yeah, and I
Like
so I
crazy
did this
something.
analysis too. Again, this is all on Twitter. If you just are looking for stuff to read, I crapped out a bunch of stuff. But I kind of did an analysis of, based on past bubbles, of sort of how high households tend to leverage to the before the bubble collapses. And it seems like we're kind of sitting right now on about $10 trillion worth of more leverage into homes and um, the stock market. And so if you think that homes will continue to increase at about 5% year over year, that's like $2 trillion more dollars into homes. So stocks, could get up to 8 trillion more, which is like 15% upside from here, which would be SPX 6500. So I think that's where people might be getting their targets from, because there's more people that are saying that the market can go to like 62, 63, 65. Some people are saying like 7,000. I think where that's coming from is basically if we can leverage ourselves to historically the maximum leverage we get before a button pops, that'll be about where you get.
And so for that to happen, you kind of need like risk-free bubbles, right? Like the dot-com bubble and '08, where like everybody's just constantly piling in because there's no additional macro risk. I don't think this is really the same as that. Because there is macro risk now that's out of the US's control, right? Like central bank divergence, currency stability, BOJ feels like it gets its own category at this point.
Yeah.
So I mean, yeah, I agree, but if you look at the collapse of like 2000, 2008, all of those risk factors kind of came together at the very end, right? When maximum leverage had already been achieved. And we're short of that maximum leverage now, but a lot of those risk factors are already very prominent. So I'm not
Yeah.
I,
Yeah.
I don't personally feel like we're going to reach that before
Well,
something
I mean,
highlights itself. But I do agree that yeah, we
another
can.
another way to think about it too is, I'm working off the Fed Z tables, which are only published once a quarter. So this is based off this. These numbers were based off of where we were from March to June.
Okay, so
Where
prior to the
where
Japan hike.
SPX was closer to like 5,200 then, and so 15% there would put us right at about 6,000.
Yeah.
No,
Fun fact
lower.
from a TA perspective, that's the test of the trend from 1929 and 2000.
Fun.
Yeah.
Yeah. So, I mean, potentially, yeah. So, like, something on the order of 5 to 15% upside from here, with the potential for a lot of downside, obviously. So, yeah, I don't know how I feel about stonks up here, but it's a weird dichotomy in social media, right? In FinTwit social media. Um, there's like half the people are like more bullish than ever because markets go up. And then the other half is like bracing for this obvious recession. And there's a lot of anxiety and there's very polar opinions, and it's fun. So then I just come in there and say, hey, there's plenty of houses, and then everybody gets angry.
I mean, there was I forget who said it, but somebody said bull markets only exist when everyone's in agreement.
Yeah, I could see that.
And that's definitely falling apart, right? Not just on FinTwit, because who gives a shit about what people in FinTwit have
Yeah,
to say? But like, I mean, like in the bond
Warren
market,
Buffett.
in the currency markets, yeah, Buffett, big speculators. The fear is being reinforced by people like that, right? And the bond market is still very much not in agreement with equities. The oil market's been insanely volatile, and that presents a huge risk factor, especially now that rates are cut. We no longer have that upside room should inflation move higher again. Right, we will not be able to restrict the trajectory of inflation. Also, don't forget that we're going to seasonally adjust back to the prior levels, from like the beginning of this year, and what our next adjustments in December. And even even
Yeah,
even the part of the
people are
basket that
still
they
looking at that. I keep
specifically.
forgetting. Yeah, I've been saying all along, just look at year over year. Anything
Yeah.
shorter is meaningless noise, and seasonal adjustments are bullshit. And the Fed was also looking at year over year until literally this last decision when they were all of a sudden just like, well, the last 4 months look pretty bleak, so
It's the
we're
only
pretty good. So
time.
we're gonna,
It's the only time they've talked about the most recent like 3 months since what
yeah,
2022.
yeah. They went from year over year, super core, whatever the hell they were looking at it for a while, to well, the inflation data the last 4 months looks pretty good, so we're gonna go for it. Oh, all right.
Yep.
So not only are they data dependent, but they're metric dependent too.
And it's an arbitrary
Which
metric.
yeah, which is a fun way of saying they're going with their gut,
That's always worked out historically.
using their astrology
Are you guys
to
both
guide them.
still long gold?
Yeah,
Nice.
yeah, that's been fun.
Yep.
Yeah, I bought in at like 2,300. It just keeps going up.
I really enjoyed the all-time highs.
I don't like owning gold. I think it's stupid that
It is.
people speculate on gold, but I can't own all dollars. They keep going down to everything else. They keep making more. Stop making all these
You could
dollars.
make believe and buy leverage dollars, aka Bitcoin.
Ooh, no. I can't wait for options on Bitcoin though. That'll be fun.
Yeah.
I don't think I'll. I mean, I don't really like crypto, but
I just want to short vol.
it'll be fun. It'll be fun to watch and see what happens. It'll be fun to get my hands on that data. That'll be fun.
Yeah.
Because then I'll actually have some insight into the sentiment behind I guess the I don't know what I call it, like the bit on chain or because it's not the whole Bitcoin market, right? There's a bunch of people speculating on exchanges right off of like institutional Bitcoin interest, I guess would it be?
I mean, here's one thing I know is that Kenny loves to short vol, and that's the ultimate asset to short vol on.
Oh yeah, for sure.
He could bleed that $60,000 a unit out for the next 15 years.
Well, I mean, you got to keep in mind that all of these crypto miners, they need the price of Bitcoin to be like 70,000 for them to break even, which is why it doesn't go over that. Because
don't forget the every few year drawdown that they inevitably suffer.
Yeah, so either fees are going to have to go up, which is going to crush the trading market, or the price has to rise. So, yeah. And if it doesn't, and they start going under, then Bitcoin just becomes insolvent.
So you think this is going to be the high for the year, or are we channeling Tom Lee in here? I mean, if I had to make a prediction for end of year, I would say that some point between now and Jan, we could get another 5 to 10% pullback. And then by Jan, if nothing breaks, right, inflation doesn't go up, labor markets remain strong, and Bank of Japan stays moderate, I could see us testing like 6,100 off of like the back of like the Santa rally. And then
that's another thing I've been having a lot of fun with, seasonality.
Oh yeah,
because
there's
last week
real
and this
effects.
next week are supposed to be the two worst weeks in the market.
See, I think the problem with a lot of like the seasonality talk, and this is, I think you're right on this, is that they really focus on S&P, and I don't think S&P is super exposed to seasonal fluctuations. Like those are really something that has been extrapolated from the commodities market, where they are very real. right?
No, sure, yeah. I
And then
mean,
it's
yeah,
been
oil
and then
varies pretty
those
seasonal.
like net gains and benefits have been pushed out onto the S&P in its representation of those sectors. But that's a really stupid take, right? Because it's like trying to figure out the options chain by only looking at VOMA, right? And so yeah, I fully agree that S&P seasonality is some of the dumbest shit I see people talk about. But there are real seasonal flows, and there are things that occur on a large scale that involve a lot of seasonality. So it's not entirely fake. It's just fake in the thing they're applying it to.
Yeah. I would say if I had to guess about end of year, I could see it going to Hmm. Yeah, I can see it going to like 59. I don't see how you're getting to 61. That's pretty crazy.
That's peak leverage. That's where you want your leverage to be for your bubble to pop.
That'd be great. If we got over 6,000, I might, I might just buy some leap puts and chill.
I think people are too afraid for it to happen, honestly. I think there's too much fear. Too many people have backed out of the short vol. Like, something would really have to reinvigorate confidence there, and something would also have to
Ooh,
increase
you know what could do
leverage.
it? You know what could
What?
do it? OpenAI might be changing their logo.
Oh, shit. Well, that's an $8 trillion idea if I've ever heard one.
Yeah. Did you hear they got oversubscribed on their latest $6.5 billion funding round?
I didn't. But that's not a lot of funding.
Yeah.
You'd think they'd need more money to bullshit people.
I mean, okay, it's not a lot of funding, but it is the most amount of funding for a startup round ever by like a long shot.
Are they still a non-profit?
The structure is a little strange. They are a for-profit owned by a nonprofit. So the
uh,
OpenAI commercial, all the commercial shit is a for-profit company that is under the umbrella of a nonprofit.
so they were sad that they couldn't pay themselves bonuses, and they formed another LLC under the. That's gonna have some tax issues.
Totally not
Yeah.
dubious.
Yeah, that doesn't sound dubious at all. Hey, okay, rubber stamp it. Let's go. Yeah,
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 it's fun.
it's not. Yeah, so you guys who are like, oh my god, my pets. Yeah, I mean, it's not like I'm bullish on anything, but I mean, if leverage is going to continue to gear up in the system, that's where we can go. I mean, it's, don't get me wrong, a 5 or 10% pullback from our current levels could absolutely see us pull back 15 or 20 or 25 or 30%, right? Um like once a pullback starts, its potential is, you know, kind of uncapped initially. And if we pull back to the parts of the options chain that have supported this bull market, um, the structural stability of that positioning breaks down. So if we pull back to 5,000, where those massive synth longs are, and say we fall below them, that's probably the end of anything bullish for a couple years, right? But so far they've supported us. I mean, they've supported us ever since March, right?
Yeah, but keep in mind too that as we as we go along and we hit every OPEX that we hit, I mean, and all of this in the money stuff drops off. Yes, there people are re-leveraging in, but every time they do that and they take in the money gains and put them out of the money for the next leg up, there is a bit of a rug pull risk there, right? Because they're pulling the delta out from underneath them in hopes that they can get enough momentum to get to the next rung of delta that they've set up.
Yeah, and
So
honestly,
there
that
is,
didn't work out great this quarter. Like, gains were really minimal. We're just back, just barely above the all-time high. And then prior quarters, we were seeing 6-7% higher end of quarter than where that repositioning occurred, and so everybody was making a ton of money. This one not so much. If actually if we go out to like the quarterly candle, 3 months, these gains are starting to diminish, and really only like the like October was 11%, Jan was 10, then April 3.92. The end of this quarter is so far 4.43, but we could lose that really quickly. Remember, we're at like gamma max, and if this quarter ends negative, that could really turn things around, right? Like if you look at September last year, before our biggest drawdown of 2023, that quarter came in negative 3%. There was no gains on that quarter. We started to see a lot of positioning get shed, and the market pulled back into pretty deeply into the end of the quarter, into October, right? And then we got the move up, but that's something to consider is you start getting quarterly losses, and you'll start to see a lot more people running for cover, running to safe assets, running to risking off over leveraged equities more than anything. And with like dispersion and stuff where it is now, I mean, like if we look at this out on the daily, and we kind of look at where correlation is headed from its low, and how the index reacts to rises in correlation, we are seeing broadly dispersion breakdown, and not only is it kind of rapid, compared to like say 2022, right, where we saw correlation turn up, but it was a pretty, through the first part of 22 it was very controlled. This is not so stable because the leverage here is significantly higher than it was at the end of 2021. And so yeah, I mean, it's it's tricky, but there is more upside room. It's just that the downside risk is much greater.
Yeah. I mean, I think that's pretty obvious for a variety of reasons that when downside comes, there's a good like the probability that it really comes is growing, right? And then the upside is shrinking, right? As we get, I mean, unless we can find a way to inflate this bubble more than a bubble has ever been inflated, which I suppose is possible because we never saw a bubble we didn't like to inflate. Uh, it's hard to say how we're going to get past 6,000 on the SPX. I mean, the only way, we've got to start making more M2, right? More money. Someone's got to print. Either the banks have to lend more or the Fed has to print, which is kind of happening, but very slowly. So yeah, I see many more downsides than upsides from here. It's kind of crazy. I still have trouble wrapping my mind around the fact that if this market dropped 40% overnight, it would still be above. It would still be overvalued. It's just kind of wild to me.
Yeah, I mean, if you look at historic PEs, we need to go back to like 3,600
Yeah.
to find like reasonable value in the market again.
Yeah, which is wild.
Well, it means if we ever do get a situation where we get sellers and we get risking off, everybody's just going to close everything.
Well, yeah.
There's nothing worth holding. Even Russell, right? I mean, like there's just no equity asset that is worth continuing to hold, because they're all so far above their historic average that like no matter where you sell, you're selling at a better spot than where it could end up.
Yeah, but I mean that's the key you just said, right? I mean something's got to trigger them to sell, right? Something's got to trigger folks to want to own more dollars than they currently do, because right now people want to own dollars almost, as little as ever, right? The demand to own dollars has almost never been lower. So something has to kick in that makes people want to own dollars.
I will point out something that's interesting about prior to market crash conditions, with correlation and dispersion, is that we generally will see the dispersion trade start to break down, and the market does not respond to the breakdown in the dispersion trade, and then the market crashes because I mean, this definitely has an effect, right? Eventually, you have too many people holding the bag at the top, essentially, and the supportive long vol that existed in the underlying is no longer there, and it falls, like it slips a support, and then there's no more support below it at all. And even if you go back to like '08, I mean, if this goes back that far, I think it does, you can see that, like, well, that's, yeah, this is like '08, really the bullishness in '08 dried up around like Jan of '07, right? And then dispersion just never came back. And by March of '08, the short vol outweighed, or the short vol in the underlying outweighed that long vol positioning, and things just broke down. They even tried to like save it for a little bit with the rate cuts, which is what we're getting now, right? Um, and you
Yep.
see that dispersion pile back in. Everyone's like, "Oh my god, it's gonna be okay," and then but there was just nothing there to support it. Not enough people came in. And you see that same thing repeated in any kind of period of extreme fear, right? Like if you look at correlation leading into like the rate, uh like the well, what was that fucking event called with Trump?
I have no idea.
Dork, what did they call that?
What?
The what now?
It was
COVID?
it was like, no, it wasn't COVID. It was like the Chinese bond scare.
Oh, fuck, I forget.
I always forget the name of it. It's got a catchy name.
When was this?
2018.
Fuck.
Like that fucking crazy bull run after Volmageddon.
Fuck.
It was called
Yeah, I don't
That's
remember.
a cool
Doesn't matter.
name.
Yeah.
Rate something. I forget.
Anyway.
Anyway,
Yeah.
but yeah, that's something we consistently see, and it's something we're seeing right now, right? Like we have the market going up, but we have correlation, also going up. And that's not something that can persist for very long, usually. Like a few weeks of that, and you're running into really big problems with support in the underlying parts of the index. So yeah, I don't know how long this bullish, like near term bullishness can last. And so yeah, I agree, Jay Fresh, that like the downside situations far outweigh the few upside potentials.
Yeah, really the thing that I think bulls should hope for is just time. That nothing falls apart and they get time for, people to create more credit and print more dollars.
Yeah. Although
aka
Yeah, it's the
inflation.
one thing
I do
that
feel like by the Fed cutting, if we don't get a big bump in inflation, the Fed has significantly reduced the amount of time that's available. Like the Fed almost needs inflation to come up now to restrict rates because they over shifted monetary policy.
Yeah, I think it'll come back unless the government stops running deficits to the extreme that they are.
Well, the ability
Um,
of the government to run deficits is going to become more restrictive, or at least the
you'd
ability
think
of the TGA to support the issuance.
you'd think people would punish Congress more for, excuse me, for printing so much money, but yeah, they haven't yet.
Yeah, that's true.
Although it doesn't help that the Fed's been adding to their long duration holdings the entire time during QT.
Yeah. Well, don't forget the liquidity bailout that's already in effect from the Treasury too.
True.
Yeah, we're definitely getting into a trickier situation here. It's not completely unnavigatable, but let's talk about the near term, I guess. You guys want to throw up some projections for this week and wrap this up?
Yeah.
Sure, can I go first?
Yeah, go for it.
All right, cool. So quad witching, which means my obligatory SPX to SPX to 50 to 50 end of week.
Oh my god.
That's not even a market crash.
No, but it's
52.50?
the start.
All right, fine.
Yeah. It's not a market crash, but I mean, it's the start. It doesn't even look that crazy.
Yeah, this is just like retracing the prior week. You gotta step your game up, Torque. This is still a higher low.
Jesus fucking Christ, this market is so dumb, dude. Holy shit. A $500 drop doesn't even look that bad.
It's just like still on trend.
It's a mean reversion.
Not even. It's like a soft mean reversion.
Jesus Christ. All right, I
it's
actually like it
bullish.
more now.
This is the bullish projection. Because you're saying we're gonna get a higher low, and that's setting us up for
Right.
6,100 end of year.
Oh my god. Well, there's my prediction. I'm bullish.
If the market wants to go up and down 20% again before the end of this year, I'll be very happy.
Oh, me too.
All
I
right,
did pretty good on the last one.
Fresh.
All right, I'm gonna say
Do I need to zoom in or back out again?
by midweek we'll hit 57.40. And then we'll
57.40.
close.
Okay.
And then we'll close the week at like 56.60.
Interesting.
Nice little uppy downy.
Yeah. I think up tomorrow. Down into Friday. So I kind of agree with you. I just think a little sooner on the downside, and then maybe like a bounce into end of week as we go into end of quarter on Monday. we go. Yeah, I like that.
Also, this week is probably going to be pumpy central because every Fed chair is speaking like every day.
Yeah, I know. They're all gonna come out and say all the dovish things. Although I'm not sure them doing that's bullish.
Yeah.
Like the bond market reaction to that is not going to be positive.
Oh my god. Bostic's giving 3 speeches in one fucking day next week. No, on October 1st. Bostic at 10, Bostic at 10:10.
Oh, so
Then Bostic at
they're setting
5:15.
Bostic up to provide downside liquidity for their sell off. They're gonna pump us up over the JPM collar on Monday, and then everyone's just gonna dump all their positions the second the collar rolls, and then Bostic's there to get people to buy the dip while they're selling.
Yeah, he's speaking tomorrow morning too. God damn. Bostic's gonna be spending that per diem, baby.
Yeah, it sounds like it.
Oh yeah. He needs a new Lambo.
Living high on the hog at the Chili's at the airport.
Yeah. Gotta try to not spend your per diem. I missed that. In Texas, the rules are if you don't spend it, you don't get it. You submit reimbursements. There's no per diem.
Gross.
Per diem's awesome.
You should live
Just
in a
get free
state
money.
that's more civilized.
Mm.
But also, thank you for informing me of the per diem rules for Texas, so I can adhere to them now.
Hey, that's for state. You can do whatever per diem rules you want in your private company.
Well, the thing is, though, is that, you know, it's Girk. All right. What do you think he's going to do?
Set up a Texas.
He's gonna try to rip me off of my per diem.
He's going to give you the same per diem I get, which is 2 chicken quesadillas per day that I am not at my normal residence.
Listen, last time I paid for your sleeping bag, okay?
That was like a $10 sleeping bag from Walmart.
That's not my problem. You're the one that chose the junior size.
Well, yeah, because you gave me like a $20 hotel per diem, okay? Fucking douche. I had to sleep under an overpass.
Alright. Well, thank you guys for hopping on. Dork, I'll try to make your accommodations more accommodating next time. Also, check your mail.
Oh yeah, that's right. Yeah, I do
Soon.
need to look for something, right? Yeah, the butt plugs are showing up, and I got to start hand painting on the smiley faces.
If you could try to use a non-toxic paint. The last time we had issues.
Oh, okay. Yeah, I mean, if you give me the extra $4 to splurge on the nice stuff, then yeah, maybe I can pull that off. But
I was actually just kind of hoping you could
paint.
pour the toxic stuff in a skillet and like skim the bad stuff off the top.
Okay, fine, but I'm gonna need a 25-cent per diem for that for the gas bill.
Okay, yeah, and coffee filters. So I threw an extra $1.50 on there actually.
Oh, fuck yeah, nice. Sweet.
What if we overshoot the JPM collar? If we do, it'll be probably Friday or Monday.
That'll be fun.
Hold on, I've got to raise my end of week so that JFresh's isn't higher than mine. Son of a bitch.
I'm the bullish one? How did that happen?
Hold on. There we go. That's better. Perfect.
I hope I win.
You know me.
My dead straddle legs hope
being a
you
bull.
win too.
Just being a bull. You know me.
You're a permabull,
Like
JFresh.
Like usual.
Yep. I've never
Wait,
met
so
anybody.
bearish that you're bullish.
You're almost more bullish than Tom Lee. Actually, you are more bullish than Tom Lee.
Cool.
So, JFresh is so bearish that he's actually bullish. It's really
I mean,
it.
he's just kind of leaning into the they've been idiots for this long. They're going to continue to be idiots for as long as feasibly possible, and I don't think that's a bad take. Like
no, it's reasonable.
it's been perfectly reasonable so far. Like we shouldn't be here already, and yet here we are, right? So why not more of that?
Yeah, they're gonna take it all the way till they can't put in another penny.
I don't give a shit. I'm just gonna sell intraday calls and puts outside of peak gamma and then trade the saddle and fucking keep making bank.
Yeah.
I don't care what the price of the market is if I'm doing that every day.
Fucking A, man.
Fucking A, right. Bull bear
All
loaf
right.
of bread.
Well,
Thanks.
It's good to be back.
Yeah, it is. Next week
Glad
will
I
be
didn't cause
exciting
too
when
much.
we're all wrong and the market just trades slightly down all week.
Oh, it's gonna be fantastic.
Yeah, VIX to 10.
VIX
Love
to
it.
10, SPX to 5600.
I need more Vana puts, so I'd love VIX to 10.
Yeah, I would too. I would definitely load up again if we got
Nobody
3
is
month VIX
prepared
back
for
under
that
14.
outcome.
I'm going ham.
If VIX to 10 and market 5600, I don't think there's anybody out there prepared for that outcome.
That's why it's the perfect outcome. Because Kenny makes the most money on it.
It's so gross.
It's just a slow bleed of like 40 points a day all week.
But it goes down instead of up. So all
Yeah.
the like sold puts are like, what's going on?
They just keep selling more.
Oh, love it. All right.
Cool.
All right. Well, thanks for tuning in, guys. I'll talk to you. Oh, we're actually meeting later. We're gonna hang out together tonight again.
Yeah.
If you didn't get enough of each other now, just wait.
Jesus Christ, yeah, it's been 4 hours. I forgot about
It
that.
never ends.
All right, I'll catch
Good
you guys
God.
later. Have a good one.
All right.
right.
Later, bud.
Okay. See ya.
For the rest of you, if you had any questions, and I wasn't able to get to them during the stream, hit me up on the Discord. I'll try to get them answered for you. And if not, I'll have Pickles Picks out tonight. Enjoy the rest of your weekend, and I will see you all tomorrow. Later, guys.